Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. The title of this video is The Power of Elliott Wave Trading, Part 1. The Power of Elliott Wave Trading, Part 1. This video is recorded by Georges Beaulieu, the founder of 24elliottwaves.com. In this video, we're going to discuss the advantage of wave trading, why the Elliott wave practitioner usually have an edge, and the benefits of a wave trading. I will share with traders, specific Elliott wave, strategy that they can use, that they can test, that they can apply, to make an excellent decision. All right, this is about the power of Elliott wave trading. So I recommend to traders that are not Elliott wave practitioners to start learning slowly but gradually, to master the wave trading, because it's very important. Otherwise, you can end up stepping on the feet of Elliott wave practitioner. This is not something that you want to do. All right. We are looking at Coca-Cola stock. We are on the quarterly chart. I have a reason why I go too far like this on the quarterly chart. The strategy that we're going to discuss here is valid on all time frame because the wave patterns are fractal patterns. You can see them on a 1 minute chart, 2 minute chart, 10 minute chart, 50 minute chart, hourly chart, daily chart, quarterly chart, monthly chart, yearly chart, every time frame, because the wave patterns are fractal patterns. Alright. By observing the market for a long time, the founder of Elliott wave principle have discovered some very, very interesting patterns. Things that are happening in the market, things that remain reliable in this market, that one can pay attention to make excellent trading and investment decision. Alright. And until you start applying the wave principle, you are just trading. But to boost your trading to the next level, you must learn the wave principle. One of the wave principle, one of the trading rules that Elliott wave has given us is that when the second wave, is very short, talking about the timing, the period that it takes for the second wave to be completed, the fourth wave will take longer to be completed. So if the second wave, it took 3 weeks, or if it took only 3 weeks for this second wave to be formed, which is a very short period of time, or if it takes, let's say, 1 week for the second wave to be completed, there is a high chance that the fourth wave may take longer time to be completed. Now, I want you to remember that, or to note it down, so you do not forget that. This is what we call the alternance between the second wave and the fourth wave, because these two waves are corrective waves. The second wave is correcting the first wave, and the fourth wave is correcting the third wave. So, like here, but if the second wave takes too long to be completed, there is a high chance that the fourth wave will take a short period of time to be completed. I want you to note that down, because this will give you the power, to trade like professional trader, professional Elliott wave practitioner, So, if the second wave is very short, very, very swift, there's a high chance that talking about the time or the period that it takes, talking about the time, the fourth wave is likely to take longer time to be completed. But, if the second wave takes too long to be formed, if you extend it more than 5 months or more, there's a high chance that the fourth wave will take a shorter period of time to be completed. This is a very powerful information. And it's amazing, though Elliott wave has, the founder of Elliott wave has recognized this pattern, you will see on all time frame, and it's amazing, it's powerful, because the corrective waves are very difficult to trade. So by knowing a little bit about what a corrective wave is likely to do is very, very powerful. because you can end up in trouble with the correct wave. You want to catch the third wave. If the second wave is a zigzag pattern and you do not know, you can get into trouble when you are catching the A part of the zigzag pattern, but there are more to come for the correction. You can be in trouble. But by knowing a little bit more about what the corrective wave is likely to be, ladies and gentlemen, you have an edge. This is one of the advantages of the wave trading. This is the edge, okay, that a professional Elliott wave practitioner have in comparison to ordinary traders. All right? You see now? Very interesting, all right? So you remember that, you note it down, and also you want to pay attention to it, because sometimes you can learn something, and then the next day, when you are trading, you're under pressure. Maybe you have some losing trade, or you have a bad week, and blah, 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 and you forget everything, and then it's like you are blind a little bit, and then a few days later you say, well, that's what George has said. I forgot that. I missed that. Okay, if you miss it, don't miss it again, all right? Pay attention to it. Before you enter a trade, don't rush. Whenever you feel like quickly place a trade, no, just stop it, all right? Stay calm, okay? So with that information, I think your Elliott wave trading will improve, okay, substantially. Test it first. Don't just go and start doing on the 5 minute, 2 minute anyhow. Remember what we said? The multi-talented trading. One strategy does not cancel other strategy. All right? Okay? Another thing I need to mention here is that the wave principle is not an exact science. Okay? It's a guidelines. Now, I've seen it all the time. Even some very, very experienced trader or investor get into trouble when they try to apply the Elliott wave like a science. They know the theory. They will tell you everything about Elliott wave. There's nothing you can teach these guys, but they get into trouble when they try to apply the Elliott wave like a science. Do not get into that fight, because when you are trying to apply Elliott wave like a science, all right, like a maths, 1 + 1 = 2, it's always like this, you will get into trouble. That's what I say to traders all the time. Maybe you have known that. Pay attention carefully. So we know these two things now. So here we are. We know that the first wave is the wave that will break out of consolidation zone for in the guidelines that we have stated to trade at 2-4 Elliott wave. With the data that I got here, looking at this information here, I can only label this move from here to here, the first wave for this Coca-Cola stock on a quarterly chart. Now, if you want to count wave, we don't count wave on one single time frame. We do other verification on other higher time frame, because the wave patterns are fractal pattern before we can validate our wave count. Now, I don't want to dwell on it because there are plenty of videos at www.youtube.com/24 Elliott waves, and also at www.24elliottwave.com, where I spend most of my time explaining to traders how to count wave and how to avoid wave count mistakes. All right. So the purpose of this video is to reveal to traders the advantage of wave trading, the power of wave trading, and why the Elliott wave practitioners have an edge. All right. So this is the first wave from here to here. And now we see the second wave. Look, the price was horizontal here. This is flat Elliott wave, flat second wave. Now, as I said to you, I'm on a quarterly chart. I don't want to go through the normal procedure of verification of each wave to validate the wave. I'm just going like somebody who is new, first wave, second wave, all right? So don't get too serious about this, okay? Third wave, all right? It's the first stage of wave count, okay? You accept that to just go in first stage like this. So we have first wave, second wave, third wave, fourth wave, and fifth wave. Let's put a bit of color into it. My apology to trader, I don't want to remove these lines here because I need them later on. So I'll leave them on my chart. But this will allow you to concentrate more and to follow me, all right? So don't think that, why is he leaving those lines on the chart? Because I need them later on. and I don't want to remove them, all right? So that's why I'm leaving them on my chart, okay? So my apology to traders, all right? I'm not just doing it for to piss you off, so to speak, all right? I have a reason for it, okay? So I color the third Elliott wave into orange, color the fourth one into green, all right? And I'll color the fifth wave into turquoise, all right? And the second wave is the horizontal. I'll leave it in blue like this. And the first wave, I'm running out of option now. I'll use pink now. So here we are, my label. First wave, second wave, third wave, fourth wave, and fifth wave. Fifth wave is completed right here. Now, you can see that how many months, we're on a quarterly chart. How many quarters it take this second wave to be formed? Look, from 1992 to 1994, we are in the second wave. That's too long for a second wave to be completed. You see what we are talking about? The time it took for the second wave to be completed, it took the second wave for this Coca-Cola store 2 years. That's a long time in trading, which means this stock was in range, okay, for 2 years. Didn't go anywhere. 1992 to 1994, can you see on your chart right here? So it's a long period. It took the second wave to be completed. Now, finally, we break out of this consolidation with this tall candle here on the quarterly chart, and the third wave was underway. Now, with this information here, the Elliott wave traders knows that it will take less than 2 years for the fourth wave to be completed. That the fourth wave will be swift, will take a shorter period of time to be completed. They know that already after the third wave is underway. Isn't it nice to know that? It's great. It doesn't mean that it will definitely be ladder, but they know that there is a high chance. What do I mean? More than 70% of the chance that the fourth wave will take a shorter period of time to be completed. They know it. So, you see why it's so important to learn the Elliott wave, all right? Why you should subscribe to our website, www.24elliottwave.com, and also to our YouTube channel, www.youtube.com/24elliottwave. Now, the discussion is continuing beyond YouTube, beyond our website, Google+. We are also on Google+. We are on Facebook. We are on Twitter. And the conversation is going on about Elliott wave. All right? So with this information here, you have an edge, yes or no? You see the power of Elliott wave trading. Here we are. Third wave is completed here. How long it took this fourth wave to be completed? Look, 2 candles here. First one, second one. 2 quarters. That's what? 6 months. The second wave took 2 years, even more than 2 years to be completed because you have another quarter here in 1994. So it took it more than 2 years to form the second wave, alerting the Elliott wave practitioners that all right, there's a high chance that when we are having the fourth wave, that the fourth wave will take a shorter period of time. In this case, you see, 2 months. Game over. All right? Game over. And they know that already. It's nice to know, beautiful, it's great to know, and it gives them an edge. After this doji here, most of the Elliott wave traders will know that the price has a high chance to go up more. Isn't it great? So we are talking about the time it took the second wave, comparing it to what the second wave, the length of the second wave will betray or will signal or will inform us about the length of the fourth wave. It's great to know. If the second wave is take a very short period of time, we know that, so there's a high chance that the fourth wave will take a longer time to be completed. If the second wave is swift, there's a high chance that the fourth wave will take a longer period of time to be completed. Another thing I need to mention to traders, talking about the power of Elliott wave trading, all right? We are comparing not only the time, the magnitude, all right? If the second wave is too volatile, there's a high chance that the fourth wave will be less volatile. All right? Are you with me? Are you getting the message? If the second wave is a complex wave, there's a high chance that the fourth wave will be a normal wave. comparing the second wave and the fourth wave. By analyzing the internal wave of the second wave, we are likely to have a bit of idea what is likely to take place in the fourth wave. Isn't it beautiful? If you like this video, like it. If you dislike it, I wonder why you dislike it, but dislike it. All right? Okay? If you have any comment, put it below. So, we are comparing the second wave and the fourth wave. So, when the second wave, trying to repeat myself so that they can get this into their head carefully, all right? Especially for new traders. If you're experienced traders, so just do something else, all right? Or don't concentrate 100% if you are very, very experienced traders, okay? Now, I'm talking like this for traders that are new, that are learning, okay, the wave principle. I'm trying to encourage a lot of ordinary traders to get on board and to start learning the wave principle so we can have an orderly market. Why do I care? And during an orderly market, a lot of market participants are rewarded, all right? So if the second wave is a complex wave, all right, a complex corrective waves, you can learn about corrective wave on our website, on our YouTube channel. If it's a complex corrective wave, all right, there's a high chance that the fourth wave will be a normal corrective wave. If the second wave takes so long, there's a high chance that the fourth wave will take a shorter period of time. If the second wave takes a shorter period of time, there's a high chance that, all right, the fourth wave, okay, will take, all right, the opposite length. So it's what the second wave has done. the fourth wave tries to do the opposite of it. If it's long, the fourth wave will be short. If it's short, the fourth wave will be long. If it's complex, the fourth wave will be simple. If it's a simple second wave, we are likely to see, all right, a complex fourth wave. Because sometimes the complex corrective wave can get a lot of traders into trouble. So it's great to know whether it's likely to be a complex wave, a complex correction or not. That's why this is the power of Elliott wave trading. Now, one of the problems we face, if we allow me to draw a line on this chart, very often, okay, let me remove this one. Very often when we are talking about corrective wave, so you see you have an impulsive move, all right, and the price pull back in one move down. Sometimes they get into trouble, they think that like this, pull back like this, all right? People think that's the end of the correction. Sometimes the correction is not straightforward like this. It's not simple, it can be complex. So when you start learning about Elliott wave, or if you are having difficulties with Elliott wave, I recommend that you spend most of your time trying to master the corrective wave. So because in order to catch an impulsive wave, like the third wave, which is the longest wave, you must understand the corrective wave, whether the second wave is completed, done and dusted, before you place a trade or before you invest. This information is also useful for investors. So you want to buy gold, or you want to buy silver, or you want to buy commodity. If you understand Elliott wave and you know these kind of simple rules that Goldman Sachs, JP Morgan, and most hedge funds are using, you are likely to time your investment carefully. All right, so you don't end up coming out and then before entering your investment. All right, you understand? It will keep you on the right side of the market, so you don't end up fighting the market, going on television, making a lot of noise, when the cycle is not yet finished, and you feel like okay, a crazy person, all right, because either market participant knows something that you do not know, all right? The next thing I want to mention in this video, all right, is the flat correction. I will talk about it also, talking about the power of Elliott wave trading. When we have a strong motive wave, the motive wave is this one, 1, 2, 3, 4, 5, price in a rising channel formed of a 5 wave. That's the motive wave. From here to here. That's the multi-wave for this Coca-Cola stock, American stock, listed on the Dow 30. So the multi-wave has started from 1989 up to this year, okay, 1997. When the multi-wave is very, very strong, as you can see here, it's a very, very strong, isn't it? How many years? From 1989, okay, to 1997, right? A long time in life of a human being. And you can see that the price went from the level of below $10, okay, level of, let's say, call it, in fact, it's $3.24 from the, let's call it, level of $5 to more than $40. That's a huge move. So if you have a strong multi-wave, there is a high chance that after the multi-wave, we have the corrective phase, talking about the Elliott wave cycle. If we have a very, very strong, okay, multi-wave, there is a high chance that the correction will be a flat correction. I will not go deeply about this subject. I will stop here, and I will highlight a few things before I close this video. I want to stop here because I want today to remember only, okay, the power of wave trading. When we are using the second wave and the fourth wave, this will give you an edge. This is the advantage, okay, of Elliott wave trading. This is the edge that Elliott wave practitioners have in relation to other traders. This is the benefits of the wave trading. It allows traders to avoid silly mistake, costly mistake, and to time their trade carefully. Not only that, to stop distorting the market. Because Elliott wave practitioners are trading the price, they keep their attention on the price itself. They do not, this is the purest technical analysis. They are not forcing the market, they flow with the market. But the danger that I can highlight for Elliott wave practitioners is that sometimes, though we have an edge, sometimes traders try to go ahead of the price, or they try to use the Elliott wave like a science, and they get into trouble. Because if you are trading, all right, and you are showing total disrespect to other market participants, you are fighting one group of the market. You don't want to fight with the market. You want to flow with the market. So do not use the wave principle to fight either fundamental traders, all right? It makes sense? I want to highlight something here. During the first wave, this additional information, all right, during the first wave, most of the oscillator will be overbought, okay? They will be overbought, and you will have a false divergence. So you have put here, this here, period 21. You can see people will say divergence, all right? You will see a false divergence during the first Elliott wave, and most of the oscillator will be in overbought zone. You can see that the CCI, period 21, not even 14, I do not recommend to traders to use a period 14 for the CCI. All right? That's my recommendation. You don't have to take it. It's up to you. Okay? So I'll just mention it. Okay? So most of the oscillator will be overbought, will be like CCI is above 100, even went to 200 level. This is the time a lot of people will be busy selling because they are trading the oscillator instead of trading the price. And one thing also, they don't know that this is the first Elliott wave that is underway. All right? So during the first Elliott wave, we'll see first bullish Elliott wave. During the first bullish Elliott wave, you see a lot of false, okay, bearish divergence. During the first bearish Elliott wave, you'll see a lot of false, okay, bullish divergence. And most of the oscillator during the bearish first wave will be in oversold zone, all right? During the third Elliott wave, the best indicator one should use is MACD. MACD very often will stay above its signal line, and it's crazy to fight MACD during that time. Most of the oscillator will be above the overbought zone if you are talking about a bullish third wave. And if you are talking about bearish third wave, most of the oscillator will be in the oversold zone, and people will be busy doing something else. When the third Elliott wave is approaching, it's coming slowly to the end, it's underway, okay, most of the oscillator will start displaying a divergence again. See here? Divergence, divergence, sell. This stock is going to go down. The advantage of Elliott wave partitioning, because they have count first wave, second wave, third wave, they don't fall into this trap. They say, yes, we know, it's normal, you'll be diverged, but they're waiting for the fourth wave. As the fourth wave is standard wave, those who are saying, I've told you that this is a bearish divergence, I told you this stock is going to go down, it's going to crash, and they start selling. If you sell and forget during the fourth wave, you can be in trouble, because the fifth wave will come later on. You see the advantage of knowing a little bit about Elliott wave, just knowing even about, okay, that the wave principle stated that the price during a trending period will display 5 moves. Just knowing that alone can save you all sorts of problems. You see during when traders are trading in the forex, all right, you see sometimes price move fast, people start selling, because stochastic is overbought, RSI is overbought, blah, blah, blah. But you can just count 5 waves before you may start looking for opportunity to sell. Doesn't mean when you count 5 waves, sell. No. When you count 5 waves, draw a line like I do here. Draw a line there. If the price goes above that line, don't sell it. All right? The warning line will save you all sorts of trouble. So we will see a divergence, false divergence during the third wave and also the first wave. Most oscillator will be above, okay, the overbought zone. This is a beautiful signal here that the CCI has given to signal the third wave here. You see, the price was going horizontal. The CCI was resetting itself. See, what's going on? And then here it changed direction. Look at it, beautiful. It changed direction nicely here. Beautiful. Can you see that? Here it changed direction. Where I put my green spotlight, it changed direction and signaling the beginning of the third wave. And but you see here the price went above the consolidation zone for the first time. For more than 2 years, this stock was stuck below the level of $11.38. But look, all right, right here, all right. From by the end of September 1994, it went above. This is a breakout. You remember the breakout will take place very often during the impulsive wave. All right, breakout, valid breakout, usually take place during impulsive wave, during the first wave, the third wave, and the fifth wave. That's where we see breakouts. All right, okay. So you see now, divergence, 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 and the price is going up, going up, going up. If you are trading the oscillator and you are just selling because you are trading the indicator instead of trading the price, you see, this is the advantage of wave trading. This is the benefit of wave trading. This is the power of wave trading. Ladies and gentlemen, if you like this video, like it. If you dislike it, dislike it. If you have any comment, put it below. I will try my best to reply to all the comments, but anytime I see a comment, I read it, I know who put it there, and okay, I will do my best to reply to all the comments, okay? So do not worry, I see some comment already there. Trader ask question, I will answer those questions, do not worry, because when we reply to the comments, okay, you will receive an email from YouTube straight away, and this will happen in due time, all right? If you truly like this video, you can also share it. Why do we share it? I'm talking about this now because when you share a video, we are sharing this information for free. We will like traders also to share it for free, so many traders, okay, can know about it. There's no point to hide this information because it's not confidential. It's a free material. Traders, okay, should learn, okay, to improve their trading, and more traders can trade properly, or the more money we can all make. All right. As always, when we learn about one strategy, we don't want to forget, okay, another strategy. This is very, very important, okay? As always, if you have any question, put it below, and I will get back to you. Until the next time, enjoy yourself, and be very happy. We are the TSTW SYS 008 traders. This is about the power of Elliott wave trading. Speak to you soon.